Hello, hello, hello. How is everyone doing today? Well, I hope everybody survived today. That was a fun one. Not like we were totally not expecting it, but definitely fun. Lots of volatility. Hope nobody got crushed and followed their stops because you always want to follow your stops and know where your risk is, especially in these times where we tend to get a little overreaction, both, especially the upside, but then to the downside. So we have Ken here. Ken says, I'm feeling very red. Well, it is the Christmas season now. You know, it's December 1st. We're going into Christmas season, so you could be red. I guess if it made you sick, you could be green. So, we could go with that theme. So, but I'm overall, looking for this nice sell off to see if there'll be some good values to pick up with key reversal patterns. Again, we talked about being overextended from things. By the way, before we talk about being overextended, if you're new here, please do consider subscribing, ringing the bell, and hitting the like or dislike button. Just won't get to see if you dislike it. We have a Discord server. Description, it's in the description below. We also have a lot of other free videos, so consider looking into that content. Back to the S&P. S&P, actually, let me change cameras for a second. Let me roll over here. Uh, Take a look. All right, there we go. So let me remove all the drawings for a bit. Let me just leave the indicators on, just hide the drawings. There we go. So back down, you can see now below the 50 exponential, this is daily chart, we have the first cross in the rotation zone. So we're going to start watching for potentially bigger pullbacks. Does not mean you can't have rallies. For example, in this other prior, went into bearish mode, dip, rally, dip, sloppy bottoming pattern, and then then you get the first crossover. We don't trade crossovers here. We just use it to help gauge our overall market direction. So when we're looking at stuff, we're not going against the nature of the market. Could this bounce in one day and wipe out and go back to bullish mode? Theoretically. I mean, right now it is in bearish mode. At least it'd have to get above the about the 46.25 to be back in neutral mode. But let's take a look at that bigger picture first off. Last week, we hit the weekly rotation zone. Remember, we got a little overextended because we hadn't even come back to it. And then we got waiting price. So we had lower RSI reading, higher price action over a couple weeks. And now we closed right at the rotation zone. Now we're looking for where we're going to close in the bottom of the rotation zone. I'm watching for lower price action. Again, when I say that, I don't just mean tomorrow. I mean in the short term that's going to probably spike below this, but then I'll watch in reference to where we close a week. The weekly rotation zones right now about 44.75 area. So even if we dip below it, I'll watch where we do close this week. There is, let's see, in terms of buy signals and everything else, it would have to be you'd have to get a close tomorrow above today's high. Just like yesterday, you'd have to get a close above today's high for a very aggressive short-term buy signal. You'd have to get a close that wiped out all this price action today and closed above the high. Not just traded above the high, but closed above the high. So the chance of that happening, it could happen, especially if there's a policy shift that, okay, we're not going to start tapering any earlier. We made a mistake and we're giving free money to everybody and we are just, who knows? But you always got to be prepared. That's why we analyze both sides of the market. By the way, we had this double bottom from last night and got questions today. Well, if it was double bottom, why did it sell off at the end? Well, the double bottom pattern completed. 46.32 was the last target. Now, that doesn't mean you can't go through it, but this pattern triggered and completed. So once it triggers and completes, then that pattern is over. So that's done with. So you don't keep riding the wave. Now, I guess you could aggressively move up the stops once the pattern's over, but you shouldn't be riding it back down. You should not be riding it back down. 46.39 was one of our key levels. Could not get a key 1 hour close above it. You can see here in the last night Asian session went bullish, stayed bullish until it collapsing through it. But even with these big red bars, it started to get negative prior to that. And when it can't even get up to the next harmonic level, so it spiked above yesterday's high during the morning session and then could not get even to the first harmonic, that is never a good sign in our book. So that is not the sign of a healthy market. Let's see here. Is that, again, broken indicator? Sorry, I got to re-add something. It was so hectic that where was that? Sorry, I lost track of my thought process. Uh, it was so hectic today that I didn't get to double check everything at the end of the day. But let's get on our little, not that one. Let's get on this and get it set up again. I don't know why that's. Hopefully they will fix that. Until they do, gotta take it off and on. And we might not have it fixed yet. If not, I'll just do it the old-fashioned way with key price action. Okay. All right, let's see. Looks like we're up there. And again, bullish mode. For me, the volume profiles is all the way up here. There's no way that I'm watching for that amount of stuff to happen. Right now, I consider bullish mode. Right, let me actually change my bullish mode line. Bullish mode, I'd sit and watch around, and this is aggressive bullish mode because you're against some rotation zones, but it would need to, unless there's a significant bottoming pattern, my bullish mode, but it won't be in place until about 45.62. That doesn't mean you can't take long trades. We could get a nice bottoming pattern earlier before that, but it would have to be a strong bottoming pattern. Otherwise, you're fighting the trend, which is down. Remember, the 4-hour rotation zone shifted to a bearish back on the 25th. And look at these rally into the rotation zone, rotation down. Rally could not close above the rotation zone, rotation down. That's why you can still get rallies, but they're rallies to be sold, not a rallies to be aggressively bought. That daily pattern, again, first cross rotation zone, closing through both the harmonics. Actually, this 50% level is the retracement harmonic from the low on October 1st to the high on the 22nd, and we just closed slightly above it after eking out that, after just touching that level. I shouldn't say eking out. So I'm in bearish mode now, which means rallies are to be sold. Next key area, major areas, is 44.40, which would be the 62.5% harmonic from this run up. We get a close below there. I'm then watching for an even bigger pullback. Let's see. And also, we have not touched, I'm just checking something. Daily has not touched the 200 SMA since back at the end of June of 20. And the 200 SMA is all the way down, at this 4,300 area. So that is a possibility. That shows how long we've gone without touching the 200 SMA, and the Dow, we'll get to that in a few minutes, but that did touch the 200 SMA, which reset it for a long time. So I'm still expecting lower price actions, but if we get that close below 44.40, then I'll really be getting aggressive to the downside. We'll also have broken this a longer term trend line. You see this longer term trend line from the lows in March of 20 to this major swing low area. I don't know how we got that setting on there. Hold on 1 second. To this low key area right in here. See where we have a defining point actually right there. So if we start breaking that too, then again, we'll keep watching for a further correction. Let's go through the price action for tomorrow though. We already have our bullish mode right there. We have to update our harmonics to the downside. I'm going with the longer term harmonics and the most recent swing. And the most recent swing would be off the 4 hour. Again, this is aggressive because we don't have a solid pausing bar yet, but it will give us an idea. And that is not going to help matters much at all. So we're just going to go with the longer term harmonics. All right, let's take a look now. On any rally, let me clean up some of these other levels. Since we just sliced through things like butter, you see here, this is not a lot of stopping points. You can see on the 15-minute, we're pulling off this level. This level's gone. We'll keep that level on because we had the little end of day reaction on it. So first level on any rally is 45.16. Above 45.16, I'm going back to the hour chart. And there's just not much there. So major area to watch for is that return to that 45.62 area. Shorter term things, this is where it's really helpful to use from today's sell-off the retracement harmonics for key levels. And you can see how that lines up with that 45.16. Try to expand this here. And I'm going to change the color here real quick. So that's the first key area on a rally. We get above that, then I'm going to be using the 45.36 area, 25% of the sell-off. Then above that, I'm watching this 45.55 to 45.62 area. And then above that, I go to the 45.74 area. So now keep in mind that we're going to have the rotation zone coming down. The rotation zone on the 4 hour, which is my major one to watch for on these kind of price actions, it's at 45.93. Will continue to drop, but on any rally, not just tomorrow, I will be watching for a return to the 4 hour rotation zone because it is still in bearish mode. So rallies are to watch for potential rollovers. There is no bottoming pattern yet. To the downside, let's take a look at this daily again. To the downside, minor support coming in right about this 44.91. Minor support, we're back above the 4,500 mark. If we drop below the trend line, then I'm watching for 45.65 area, 45.67, 45.65, this harmonic. And below that, 44.37 to 44.40, that 44.40 level I talked about yesterday. That's where I'll be watching for a close. If we went through that level, then let me see here. If we went through that level, yeah, that's still a decent level right there. Then I'm at 44.11 to 4,400. So those are all the key levels to the downside and upside. Now there's a lot of air pockets in today. So if anything news comes out, that people all of a sudden buy the dip really bullish, because a lot of people bought the dip this morning and didn't get out like our stuff showed, like with the completion of that double bottom, and it rolled over. They just got their face ripped off. And that only holds up so long. So keep that in mind with this. We could get a little acceleration to the upside, but you get to some of these key rotation zones like the 4 hour rotation zone, and then watch for a potential rotation back down. NASDAQ, let's take a look at it without the indicators. Not quite yet back to the 50 EMA, still has room to run. This would be a horribly sloppy because of this shoulder, head and shoulder pattern. Might put that on there anyways. But that is really, really a sloppy pattern. Before I do that, let me just take a look at the weekly, because now we finally reconnected with the weekly rotation zone. We were overextended from it and just reconnected. And at this point, we're still below it. The key level to watch for is about 15,400. So on a continued pullback, that will be, especially on a closing basis by the end of the week, if we do continue lower, where I will be watching. Again, higher high on the weekly, lower high on the RSI, nice divergence, and now pulling back. One thing to learn is watch these weekly rotation zones, and whenever you get really overextended, you start pulling away from it, is a time to raise and tighten your stops in case you get the pullback. So if it keeps going, you're just raising your stops along with it. Last week was a warning shot, outside week. So higher low than the week before, lower high, higher high, lower low, outside week, and then we continued lower this week. Let's take a look at that really sloppy head and shoulders. I've got to clear up some of these lines too. Let me just take a couple things off here. I wish I could hide lines except for what I've recently drawn, but we can't do that. Just watch this pattern for a longer term, because it's now officially broken that level. So you got to extend it from where it broke the neckline instead of from the directly over the head. So with those levels, we'd be looking at about 15,006, 15,004, and then 15,002. And at least the second target would take us back down to the weekly rotation zone. So again, it doesn't have to get there instantly. Keep that in mind with these patterns. They don't have to get there instantly. It's not like, hey, wait, we're going to go there in a day. It has to happen tomorrow. No, this is a longer term thing that even on rallies you watch for the rollovers. So on the bullish mode, stayed bullish until back again this afternoon selling, and then just crapped out. Way below there. I'm just looking to see where bullish mode would start tomorrow. There just is, I mean, it's hard to. Aggressive bullish mode would be above here. That would be super aggressive bullish mode would be above here. More conservative would be above about 16,170. So those are the key levels I will be watching the upside tomorrow. So above 16,045, I'm then watching the 16,170 area with the prior retracement harmonic, the rolling over 4-hour rotation zone, and this prior support becoming resistance. Then if we got back into that, it'd be about 16,300. To the downside, at this point, I am, let's see, I'm lowering the harmonics just so I'm actually going to go to a reverse harmonic here. Since we don't have a pausing bar, let me anchor that again. All right, so what does that give me now? Let's zoom in. Oops, I forgot to change that also. There we go. So next key support would be about 15,805 to 15,787. We drop below there. I'm watching 15,729, then 15,678. And then below that, I'm actually going to take off this key level right there, and we're just going to that 15,607 area with this sloppy head and shoulders. So those are key Key level on this, we're still far away with this big run up in the NASDAQ. So you can watch below that. It's actually a support zone about 15,565 to 15,607 because you have the 50% retracement from this run up. So that is another key area to the upside. Below that, your level is about 15,417. Yeah, Mike couldn't find bull mode. Bull mode's hard when you don't get any stopping and your price action's a lot higher. There's a lot of overhead resistance. So when you have a lot of overhead resistance, it's just you got to be cautious because look at all this. Even if you rally back into here, all this support, besides this one dip below, so all this is now resistance. Even this is resistance from over here. And everybody, you know, who got long on this little pullback is now trapped. So a lot of times when you're trapped, rallies up that level, okay, I'm out. I'm out in case it rolls over again. So that's where these rallies, it's not going to be aggressively buying. What else do we have? Let's just see, going back to that daily chart. Again, that 15,787 is right where the 50 period exponential, so we have a cluster there. So watch tomorrow if we dip on the open. That's my first key level I will be watching for to potentially hold. All right, let's switch over to the Dow. The Dow, this is just ugly. Again, we had that double on here. Let's go through that first. Running up, you know, we had this little mini double bottom running up there, just eking above it and then rolling over. Again, don't ignore the targets from the double. Rolling over hard. So then my next cluster area, and we did pause there briefly, was this key area. Then we just sliced through it. We just sliced through it like butter. So let's see what we have now. Again, it takes a little more time when you get these kind of aggressive sell-offs. I'm just going to clean up some levels so we can reevaluate. Ugh. There just is not a lot of good price action here. This was a disaster day. I mean, when you don't get any back and forth and you have this relentless selling pressure, you just don't get key great levels. So I'm going to still have to use, for bullish mode for me, is coming until it gets above about 34,535. Not looking to be bullish mode unless there's a very, like a double bottom pattern, something significant that shows potential reversal, but then it's still selling the rallies because your rotation zone on the 4-hour is right up here at that bullish area I marked. Now it will dip a little below, but it's got to get through this key price action, which was some support today, turning into key resistance. So that is pretty major resistance right there. So short term, 34,175, then 34,453, then 34,529. If we did get above there, I'd start watching for the top of the rotation zone, and again to kiss the long-term trend line goodbye. Below here, below today's low, and again, these levels, I still have to go with this about 33,725 to 33,750. Minor 3316, but then major 33,300. 33,300 to, and this is looking to retrace. Keep in mind, remember we were down at these lows back at the 1st of October, and the Dow, with yesterday's move, closed below the 62.5. When we get the 62.5 close below, I start watching for a retest of those low areas. So especially these, see these key closing low areas? Like this is a key close, nothing else closed below it back at the end of September and October. That's my next key area to really watch for. And then if we get below there, I'm watching for a retest of those key lows and the 3,300 area. So overall, we didn't look at the weekly chart of the Dow, and the Dow, let me take off the indicators. The Dow clearly now, yesterday closing below, and then just continuing. Next major key area, again, we're so far, remember these dip areas we just talked about. Let me put back on the indicators. So we had this area that's just in front of the 50 period exponential and then these most recent lows. So this is very key should we get down there for the Dow. You start breaking that, then I'm at about 33,000. And then below that, we don't have a lot of key support back down until 31,140. Not saying that has to happen because we'd have to chew through a lot of price action before then. We have some major support zones coming in here, but it is something to keep in mind. Daily is clearly in bearish mode, even today running up once it got above the double bottom target to the rotation zone and rotating down. That's why don't get overexcited on rallies until we get some price action that is potentially sustaining a low, because rallies can easily be sold into the daily and the 1 hour rotation zone. Getting a bit oversold. So, just going to keep that in mind. Doesn't mean you have to bottom and have a power move, but it could be we could get a short-term little bounce. Then again, I will start watching for the selling pressure. Let's check in an ARC. ARC, as you know, we follow Tesla a lot. And ARC has been buying, even on dips, been buying a ton of junk. It's closing in on the 97.22 area, which was the low back in May. If we get below that, and that's a key 50% level, remember from the lows on March of 20 to the highs back in February of 21, you can see what ARC's done this year, even where January started for ARC. January started right around in here, right about that 25% harmonic level. So well below yearly performance, not good. If it gets below that 97.22 level, that will not be good. I'm really then going to watch for a pretty aggressive move to this 89 area. That's going to hurt a lot of people. And then the key line in the sand is this harmonic and the 62.5. You get below that, if we continue cascading down for a little longer, it would not be pretty, especially with redemptions. So the key line ARC has to hold is 97.22. But if the market and the NASDAQ continues a sell-off, it would not be pretty. By the way, key resistance right now coming in about 105. Anything else anybody wants to look at? Well, I'm here. Let's just take a look. We've had Apple with some good trading this morning before. Oops. Put too many A's in it. With some good trading before the sell-off. But you can see here, higher high, lower high in the RSI. I'm now watching for a pullback in Apple to at least the 162 level. Again, not necessarily tomorrow, but we have a key divergence up there, extended in the look from the weekly rotation zone. That would just touch it. What I'd love to see with Apple is back down to the 148, 150 level, and then to get a buy signal down there. Just got to overbought on the weekly basis, dip below it, back to overbought, and we have potential weekly divergence. So I'm keeping a close eye on Apple because of where it's run up to. So that's another key one to watch for a potential bigger pullback. Again, 150 and then a potential either weekly or daily strong buy signal could be a nice re-entry into that. NVIDIA, I'm still keeping an eye on this. NVIDIA, again, couldn't get a close above that 339.04 harmonic, moving sideways, now closing into the rotation zone right at this support shelf. Next key level is about 302 to 305. Keep in mind, though, here's another one. NVIDIA way off its weekly rotation zone. Dropping out of overbought mode, but still, I'd rather see something back, especially around this, even below that 300. I will start watching it when it gets back to about 288 to 292. That's what I will keep an eye on with NVIDIA. Okay, you know, it's been on some power moves, but again, when these things get stops. So if you're long, really start watching at least that 300 level, because below there could be a dip, and it doesn't mean it has to stop at 288. If it went to the bottom of the weekly rotation zone, which is going to keep rising, but that's around 250 right now. Does that, I'm saying that has to get there tomorrow? No, but you can easily get in the last pretty big pullback right to the bottom of the daily rotation zone. This one to the bottom of the daily rotation zone. This one didn't quite get there, but then it got a really nice signal that just dipped into it. Then you got the really great signal at the bottom of the rotation zone and the rotation up, and it had another buy trigger right here. So be patient. If don't chase these things, we want a Bitcoin. Bitcoin. We'll take a little look at crypto. Bitcoin at least got out of here. Remember though, we have can it hold? Well, it held up pretty well today with the market sell-off. But you know, it's triggered a pretty big double top, coming back and testing the base multiple times. The daily rotation zones against it. So even on rallies, this is not time to be aggressive with Bitcoin at the time being, unless we really get a move back on. I mean, it's not to get aggressive. Your first thing you want to see is a close about this 59,000 level. Let me just take a look at this weekly. Is return to the weekly rotation zone. A weekly close above last week's high of, and this is on a weekly basis, 59,526. A weekly close above that would be a confirmed rotation back up. And then I'd first of all be talking about the 65,500 level before 69.9, because you're also fighting this daily double top, and we didn't get to the stop reduction. So keep that in mind. The pattern is still bearish for the time being. So any buys in Bitcoin are very aggressive. Your target reminders for the downside though are 53,000 essentially, 50,650, then 48.3. And thank you. Yeah, Discord is going pretty good. You know, we got a lot of people back and forth talking about stuff, applying stuff that I've talked about. So if I'm not around, other people are talking about it, and even also giving their insights and stuff they're doing. So it's a really good. It's a place for traders to discuss price action, market stuff, and stuff we discuss on this channel. Thanks for that. All right, I'm going to wrap this up. Tesla live stream starting in about 20 minutes. Thank you, everyone. Ooh, I forgot to take off I forget to take off my symbols. I forget to take off my little stickers. I need a reminder. But until then, I will talk to everyone later. Bye for now.